Happy Friday, guys. It's your boy Stas here. Welcome back to yet again another video. And cheers, by the way, guys. I appreciate all your support as we're on the road to 100,000 subscribers. Yes, you heard that right. We just hit 50K, and now we're going to 100, baby. Let's go. So make sure to subscribe, hit that like button, and let's break down 5 companies, 5 stocks that just reported earnings. Some yesterday, I think some the day before. So let's just get into it. Yeah, let's do it. Number 1, Celsius. Celsius right now is on fire, guys. I'm not sure if you saw it. And by the way, the entire stock market right now is down, all the indexes, so keep that in mind. But Celsius is up 31%. Yes, you heard that right, guys. 31% in the green after the company reported earnings. So let's take a look. And by the way, this stock has been downtrending for months, so it's about time we get a big move here. I mean, guys, we were under the moving averages for months. I'm talking 6 to 8 months at this point, probably longer than that. And now we're finally starting to break back out after earnings came out. So let's see here, guys. Celsius reported GAAP earnings per share of 14 cents versus the 11 cents expected on revenue of $332 million roughly versus $328 million expected. So they beat EPS, beat on revenue, and let's see here, guys. What else? Anything on guidance? It looks like here stock surges on Q4 earnings. Alani Nu acquisition. Wait a second. Is that the Alani? Alani is another energy drink company, and they have other products as well. Am I mistaken here? Let me make sure here, guys. I don't want to. Celsius also announced that it has entered into a definitive agreement to acquire Alani Nutrition for $1.8 billion. Oh my goodness. The purchase price includes $150 million in tax assets for a net purchase price of $1.65 billion in cash and stock. So yeah, Alani Nutrition is, they make energy drinks. I think they're more female focused. At least their marketing is. I mean, I've tried, I think, 1 or 2 of their bars before, just for fun. I think one of them was the peanut butter and jelly protein bar. And I mean, guys, these things are not necessarily healthy, quote unquote, even though they're marketed as such. That's a whole nother topic for a whole nother video. I mean, if you look at these protein bars, not just Alani, but all these freaking protein bars for that matter, they have like 90 ingredients in them. So they're not necessarily healthy. But I guess they're a quick source of protein, a snack on the go, yada, 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 whatever. Clearly, there's value there since Celsius just bought them for almost $2 billion. So that's a big move there, no doubt. Alani is definitely a growing company, growing brand. Boom, Celsius bought them up here. I don't know if we had any rumors about that in the previous weeks here, but we got the news today, guys, or yesterday, and man, this thing is going nuts. And shout out to the people over there at Alani. I think that's a relatively new brand. I'm assuming it's a couple years old here. And getting a $1.8 billion exit, that's big. Shout out to them. Who knows who they are, but you know who the executives are there. But kudos to them, man. So Celsius is ripping, no doubt. It's looking great, but still, in the grand scheme of things, it is still down big time. I mean, guys, this stock is still pretty much where it was at back in 2022 in that disgusting bear market we had in the stock market. So for it to get back to $100, it's going to need to go up about 200% more from where it is now. So yeah, long ways to go. But who knows? Maybe this sparks the rally and it goes a lot higher. But for me, guys, I'm not in the stock. I haven't been a fan of it per se, and I'm not planning on buying it. I don't know. I just think there's better places for me personally to put my money. So that's number 1. Number 2, we have Walmart, ticker symbol WMT. They reported earnings, I think, on Wednesday, right, or Thursday, yesterday. Either way, their stock's dumping. It's down from 106 just about a week ago. Now it's at $95. We're down 11%, putting us in correction territory. And hey, it looks like a healthy pullback, does it not? Here on the charts, guys. I mean, we've seen this happen time and time again on Walmart. It's not that big of a deal, technically speaking here, although we are slightly under the 180 SMA on the 4-hour chart. That's not the best sign, but hey, uptrend is still holding in the grand scheme of things, which ultimately, guys, I feel like Walmart will recover, will get buyers to come in, buy the dip here, and we'll get a rebound. So, crap, I don't think their numbers are here. I scrolled all the way down. I can't see them, but it looks like they guided for Q1 2026 adjusted earnings per share 57 to 58 cents versus 64 cents expected. So guidance for Q1 adjusted EPS 2026 is weak, right? And let's see. We got some price target adjustments, which, not a big deal. I don't really care too much about that. Walmart hikes their annual dividend 13% to 94 cents per share. That's good. Very good increase, guys, 13%. And it looks like here they did 66 cents of EPS, but I'm just not sure what the estimate was there. Either way, guys, watch for buyers to come in here. We're selling off on weak guidance, but I don't think it's going to bleed a lot more. Let's just say that. I think buyers will ultimately come in here at about 90, 95 bucks per share. It's only a matter of time. So that's Walmart. Let's see. XYZ is another one. This is Block. This one's collapsing. Holy smokes, guys. Block's down 15% right now, and essentially getting right back to the bottom of this channel that I just had drawn out. Let me redraw it so you guys can get a better idea. I mean, holy smokes, guys. We are very oversold now. We're very oversold, and it doesn't look like we're getting a rebound or any signs of it quite yet. You know, it looks like a falling knife, so be careful. But ultimately, man, it will get a rebound, a relief rally. But the $1 million question is when? I don't know. We're not getting any signs of it quite yet, guys. So Block reported adjusted earnings per share of 71 cents versus 87 cents from last year, or not last year. Why do I keep saying that on these videos sometimes, guys? Not from last year, but based on the analysts, right? So they did 71 cents versus 87 cents expected. Not the best sign there. Big miss on EPS. And it looks like they missed on sales. 6.03 billion versus 6.29 billion. So a double miss. Oof, guys. And CEO Jack Dorsey expects to end year at Rule of 40 run rate. Whatever the heck that means. But yeah, Jack Dorsey, I forgot about that guy, man. I haven't heard of that name in a while. But yeah, ever since a couple of years ago, I haven't heard of Jack Dorsey. Either way, XYZ not looking good at all. And this is one that I've been critical about. You know, this is one that it's one that was at $300 over the pandemic, you know, and it just hasn't come anywhere near that since. So in my opinion, you know, we got a head and shoulders on this max chart. This stock, man, not a big fan of it. Haven't been a fan of it for years, and for rightfully so. I mean, look at the performance. You know, this is one that I was looking at a couple years ago, and I was like, yeah, I'm staying away. Thankfully, I did, because look, no return in a couple of years. In fact, it's gone down. Not the best sign. Jack Dorsey, let's just say, I don't know. What's this guy doing? He was at Twitter. He ran Twitter terribly. Let's be honest. Twitter sucked under Jack Dorsey. Now Elon's running the ship, crushing it with X, you know, and Jack Dorsey's an afterthought. You know, Square, Block, it's not looking great, man. Not looking great. So before we continue on here, make sure you guys get your 30 stocks from Mumu. It's free money. Check out the link down below. Fund your account with at least $100. You get 5 free stocks. Fund it with at least $2,000. You get 25 more stocks, guys, and your uninvested cash now will earn up to 8.1% APY. So, guys, if you want 30 free stocks and you want to help out the channel, check out the link right down below or go to stocksurfest.com/Mumu. And now let's continue on here. So, Number 4, we got Rivian. Rivian reported earnings, I think on, was that yesterday? It might have been yesterday. Let's double check this date here, guys. Yeah, yesterday we got Rivian's earnings, and their stock's down 3%, and it still looks very choppy. This thing's been chopping around sideways pretty much over the last couple of months. If I draw this out right here, we've been moving sideways between $12.50 on the bottom side to about, let's say, $15-16, top of the channel here. We've been in this $3-ish window over the past couple of months, and we're still in it. We're still in it, guys, and we're down 3% on the day today. And to show you how much of a support the mid-12s is, look, we pulled down there this morning, and we held it. We actually double bottomed in the intraday session as well. About an hour ago, we double bottomed, and now we're starting to break out. That's a big support for Rivian. So this company reported earnings per share. Let's see here, guys. They lost 46 cents on an adjusted basis. That beat the loss of 65 cents expected, and sales also beat by a very wide margin, $1.73 billion versus $1.4 billion. So a nice double beat for Rivian. Let's see. Rivian produced in Q4 12,700 vehicles at facility in Normal, Illinois. Let's see here. Delivered 14,100 vehicles. Pretty good. Solid. 2025 guidance, R2 update. Where the heck's the guidance? It looks like calls 2025 guidance clearly weak. That's what Gary Black said. Where is it, though? I'm not seeing the guidance here. Where are you, guidance? Either way, yeah, Gary Black said the guidance is weak. And clearly, guys, this stock or this company is still losing a lot of money. Here it is. Rivian sees 2025 vehicle deliveries of 46 to 51,000. I mean, that's not ideal. That's not really growing too much. I would have liked to see that a lot higher, but who knows, man? It could accelerate in the future, but at this point, we're clearly sideways. On the 4-hour chart, you can argue we have an inverse head and shoulders as well. You guys see it right here, kind of. We have the left shoulder. You guys see that. The head's right here. Boom. You guys see that. The right shoulder is right there. You guys see that. So, yeah, we'll see, man. I'm not the biggest fan of this stock right now, but who knows? So the next one and the last one for the video, by the way, guys, hit the like button if you stuck till the end, and make sure to subscribe if you haven't done so already. We're on the road to 100K subs. We have Shake Shack, which, man, I've actually been craving Shake Shack low key, guys, for a while now. It's been a while. I've been craving it, and I haven't gotten there. I've actually had kava a couple times over the last 3 weeks, and I got to get to Shake Shack, man, for some lunch. You know how that goes, man. 1 o'clock hits, and you're like, man, I'm freaking hungry. You don't feel like cooking sometimes. Just go get some Shake Shack. That's how I'm feeling right now. Hey, it's Friday. Maybe I'll go do that today. You never know. So Shake Shack's down 7%. Man, a lot of these stocks are getting squashed, except for Celsius. Shake Shack's down on, let's see here, guys, a double beat. They double beat. So they did 26 cents adjusted EPS versus 24 cents expected on sales of $328 million versus $327.8 million expected. So a double beat for Shake Shack. Looks like Q4 system-wide sales of $500.7 million, up 13.3% year over year. Same Shack sales up 4.3% year over year. And it looks like they see Q1 sales of $326 to $330 million versus $331 million expected. They also reaffirmed their full year 25 sales guidance of $1.45 to $1.48 billion versus $1.46 billion expected. Pretty good guidance there for Shake Shack and a double beat. I don't know why the stock is selling off, but clearly it's selling off. It looks like we initially popped after earnings to 130, and now we're back to 115. And clearly, on that pop after earnings, we tried breaking out above this moving average. You guys see it at the 180 SMA. but we failed to do so. We failed breaking out of 125. If we did, that could have sparked a rally maybe towards 140, but we didn't get it. We didn't get it. So what do you guys think? Let me know your thoughts in the comments. Keep your eyes on all these stocks, but please do your own research. I'm not a financial advisor, guys, and yeah, we'll leave it there. Join the email list. It's free. That is linked down below. I send out my top stocks weekly, and get your stocks from Mumu. That's also free. 30 stocks with at least a $100 deposit. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks. So guys, get on it. Use that link down below or go to stocksurfest.com/Mumu. And with that being said, cheers. I'll catch you in the next video.